That's what they want you to do. They want you to kind of say, oh, this is just the way the markets are right now. You want to be able to look beyond that and say, what is going on? What is causing this type of action in front of me that's saying, be aware, this type of gambling, historically, .com high, 2007 high, even 2021 highs, this is the type of things that were going on before a bigger correction. And again, this level becomes your next trend line, and that extends out. Right now, it's at 115. It keeps going up, though.
Is Tesla heading toward a major support collapse? Will Bitcoin break its critical resistance? And what about Apple's surprising downgrade? Gareth Soloway dives deep into the charts, analyzing market movers and uncovering shocking patterns that could shape your next trading moves. Don't miss this game-changing insight into stocks, crypto, and commodities.
So in today's game plan, we're going to look at the charts, the technicals, what's going on in the market, what are the big movers, what are the trading levels for the day. We'll cover crypto, we'll cover commodities as well as stocks. All right. We're going to start with the S&P 500. Let's walk over to the big board and take a look at where things are trading. So the first and foremost thing here, this is your after hours yesterday and your pre-market today. So you can see that in general, we're neutral to higher. If you look back over here, this is showing yesterday's move up in early trading and then the same rollover. And this is something I've talked about quite a bit, that there seems to be almost daily this kind of initial push in the markets, whether it's pre-market gapping the markets up or it's during the early period where money is flowing in from the retail crowd, and we're seeing distribution continuing. And again, if you've watched these game plans, you've literally seen me talk about this almost every day because it's happening almost every day, and you can't just ignore it. You can't just say like, oh, well, that's just the way it goes. That's what they want you to do. They want you to kind of say, oh, this is just the way the markets are right now. You want to be able to look beyond that and say, what is going on? What is causing this type of action where the S&P was up about 1.5%, 1.6% yesterday and only ended up about 0.5% higher. All right. So again, yesterday we faded. We still ended green across the board. So it was still a day where the markets were up across the board, but again, way off of those highs. And then in the after hours yesterday, just this sideways chop, and this morning sideways and a little bit of an incline. So they're trying to get this market back up. Let's see today again. Do we see a same sell-off where we see selling into a gap up today, although it is only a minor gap? Now this is the S&P daily chart, right? So what we have is we have this wedge pattern. The wedge pattern, again, upsloping wedge patterns about 8 out of every 10 times, where 80% of the time they tend to break to the downside. In this case, that's exactly what happened. What ended up happening here, we had the wide range red candle. We talked about how bad that is for a technical basis. If you're looking at technical analysis, having a wide range candle from here to here, engulfing all of this action over here, that really does a lot of damage psychologically, ultimately, technically to the charts. Now, since then, what's been going on? Well, we came down, we made a low, we went up, we retested the scene of the crime right there. That same trend line again that was support over here and over here is now resistance. At that point, we went down, we retested the low, and now we're on the verge of potentially retesting that again. Now, what type of pattern is that, right? If you get a big wide range candle to the downside and then you see sideways chop here, sideways action up and down kind of like this, we know that in general, if you look at this pattern in technical analysis, if you match this up with many other periods where this has happened in the past, it generally gives you a negative bias. Now, that doesn't mean it can't fail. If price were to close above here and then get above this area, then you could say, okay, that has now negated the bearish angle and it would be off to the upside races. But that hasn't happened yet. We have to let the charts tell us. We don't want to ignore the charts. We want to go with the charts because that's where probability lies. All right. Let's go on to a couple other things here, guys. If we take a look at some of the movers and shakers today, we do have some like, for instance, Micron is moving up again. Micron had a big bounce yesterday. So again, Micron up 10% yesterday. It's up a few more percentage points today. NVIDIA is also up this morning, although I do have a key level to look at on NVIDIA. So let's take a look at NVIDIA here, guys. The last few days, it's jumped about $20, which is a big 13.3% move. It is approaching a key level here. This is double top at at 153.25, and then your upsloping trend line right in that same vicinity. Interestingly enough, if we look at pre-market, look at where it's currently trading, right into that level. So this will be a very, very interesting area today to monitor to see how NVIDIA does. Does it push through? Does it reverse? How does it ultimately trade? Micron still isn't at major resistance yet. It is pre-market to the upside. We can see it's approaching 104.25. Got as high as about 105.25 in the pre-market action. But if we go to our daily chart, really my first level is going to be around 114. Notice the major high to major high to major high. That will be a significant shortable level on a day trading, maybe even a swing trading basis. If it does break through that, you would look then for this gap fill right up here, which also, by the way, happens to be very close to the 618 Fibonacci retrace right in this vicinity. So again, if I had to play this, and again, let's just game this out. I always like to game it out. I would day trade this level here, resistance number 1. I would just day trade that one for a short, make a little bit of money, and then patiently wait for this level, which is a 2-factor level, gap fill, pivot low, and the 618 fib, and that would be then the swing trade short should it get to that level. All right, Apple is falling to the wayside here today, so we are seeing Apple down again today. You guys know I've talked about those puts that we took pretty much at the highs, the all-time highs on Apple. Apple then proceeded to fall until yesterday's bounce. We did get a small bounce on Apple yesterday. Today it's back down sharply after a downgrade. So it was downgraded to a sell rating. You don't see that happen very often in the markets where these analysts actually have the guts to downgrade a stock like Apple to the sell side or sell rating. But that's what it did do. And again, we are seeing Apple. It has come off of its lows initially. But again, don't be surprised if this continues to head lower. I still have my target zone right here, right at this level, right here at 236 to 237. That's target number 1. And you can see again, just any curl over, move down into that range. That'll be again where I unload half of the put position that I picked up right near the highs up here. All right, Tesla. Now, Tesla came close to my target that I gave you guys a couple weeks ago. I said, hey, it's going to break this upsloping parallel. It's going to fall. It got kind of close within about $13 to $14 and then bounced. But notice yesterday's price action. While the markets remained net positive, Tesla ended flat on the day. And if we flip over, Tesla is now down again today, approaching that 400 even number. And I think, again, that's a signal that's telling you that this technical level of support is pulling it towards that target. So I'm still looking for a 360 handle on Tesla before it finds major technical support in that range.
Gareth Soloway unraveled some fascinating market trends. Starting with the S&P 500, he explained how persistent selling into rallies hints at underlying distribution by big players. Gareth then highlighted key bearish patterns, such as Tesla's approach toward its 360 target and Apple's sharp fall following a rare downgrade. Switching to semiconductors, he analyzed NVIDIA's pre-market strength and Micron's levels for day trading opportunities, all while pointing out major resistance zones. Stay tuned as Gareth uncovers the next big moves in Bitcoin and shares his advanced technical strategies.
The key is this, is that when you see these type of stocks that the valuation makes no sense and they're running a 200, 300, 1,000%. In fact, Rigetti from October is up 2,500%. Again, only 15 million in revenue expected. By the way, I wish Verified Investing could get a valuation like that. That would be pretty impressive. 400 times revenue, forward revenue guidance would be pretty insane to be able to command that type of valuation. But the kicker is this, right, is that tells us there's gambling going on. There's no real fundamental basis for these things, which are warning signs. All right, it's nothing that I trade directly off of. It's more of a red flashing light in front of me that's saying, be aware, this type of gambling, historically, .com high, 2007 high, even 2021 highs, this is the type of things that were going on before a bigger correction. And again, if we take a look at this is the NASDAQ composite chart, where if we look here, this is your COVID low, your bull market high in 2021, right? So this is COVID right here, all right? And again, the reason I'm drawing your attention, here's your bear market low of 2022. So these are all the major pivots on the market for the last 5 years, basically, all right? So you have your COVID low, 2021 bull market high before that big correction, 2022 low, and guess what we just hit up here? I've shown you guys this chart before, but I want to kind of show you again that this is something that, again, it doesn't really mean that, hey, we're going to crash. In fact, markets don't start with crash crashes at tops of cycles, it's usually a buy the dip mentality, just starting to make lower lows and lower highs. But you have to take into account when you see something like that and you look back historically and see those other levels. If we look at this chart, we saw a nice up day yesterday on Bitcoin. But again, if you've been following the game plan, did it really matter yesterday? It doesn't really matter, because all that matters is this line here, which we still haven't gotten to, and this line down here. This is, again, that megaphone pattern here, right? Two lines going out like that, right? And essentially you have that type of thing and you're speaking into it. That's where it gets its name, a megaphone. It blasts it out there. And again, it's two diverging trend lines, and price again, down, up, and then the idea is and you have to basically watch for which way it breaks, and that's going to be the kicker. Now, what's interesting is this line here, if we look at this upsloping line is beginning to converge with the 108,000. So if we just chop in this a little bit more, we could actually go retest 108, the all-time high on Bitcoin, and it would still be in that range. Now, if that breaks, then you're looking at 115, and I talked about that because, again, this level becomes your next trend line, and that extends out. Right now, it's at 115. It keeps going up though, because again, it goes up. On the downside, if we break there, you go down right in that $75,000 range. All right. So again, as a technician, do I know which direction it's going to go? No, you don't. What you know is you know your resistance, you know your support. Now you could make a probability analysis, which is technically speaking, you have this down move here. All right. And this is more bearish. I mean, historically, again, that's what we know from technical analysis as being more bearish, but I would say it favors the downside maybe 65 to 35%. It's not like a resounding 80 or 90% at this point. It's more 65, 35. If it was a little bit tighter, for instance, if this was like a tighter bear flag down in the lower range, well, that's like more like an 80% chance. The more it kind of goes a little bit wacky like that, you can get some of these more, lackluster probability odds, still favoring the downside, but not robustly at this point. All right.
Gareth's market analysis provides powerful tools to navigate today's volatility. Whether it's Apple's downgrade, Tesla's target zones, or Bitcoin's megaphone pattern, his insights are invaluable. Subscribe now for more expert strategies, and let us know in the comments. What's your next big trade? Don't miss future updates.